After 2 years of phenomenal performance, emerging markets from Brazil to Indonesia are taking a big hit as investors shun risk. For more, I'm joined by Jim Rogers, who made his name as co-founder of the Quantum Fund, and he's now chairman of Rogers Holdings. Jim, thanks for being with me. Now, at least compared to the West, fundamentals in emerging markets are actually quite healthy, but investors are really rushing to the exits right now. How bad do you think things are going to get?
Well, Tara, that's because in the U.S. and Europe, which are the two largest economies in the world, we have a dismal outlook for the two largest economies in the world, and naturally that's going to affect all the other emerging markets. Some of the emerging markets, of course, are making things worse for themselves. The Brazilians have put on currency controls. The Brazilians started a trade war, a possible trade war last week. So they're not contributing to good times. Some of them are hurting instead of helping.
But as I mentioned, if you look at some of the emerging market economies, fundamentals are actually quite healthy there. So should people really be looking at this in a different way, or would you suggest exit emerging markets?
Well, I'm short emerging markets, so I'll have to leave that to everybody else. But I have sold short emerging markets. I have sold short emerging markets, American technology stocks, and European stocks. I think you should exit, but obviously I have an interest because I'm short the stocks.
Any selective bets that you would make at all in emerging markets, or are you just short and that's the end of it?
I'm short across the board. I'm not short China because I own Chinese shares, but I'm long commodities, which will help. You know, if commodities do well, that's good for many emerging markets. But no, I'm short across the board. I'm short mainly stocks, and I'm long commodities and currencies.
Now, you mentioned China just a moment ago. Everybody is worried about the U.S. and the Eurozone right now. What about China? Do you think investors, you say you're still in there, but are people underpricing the possibility of a slowdown in China?
No, there's going to be a slowdown in China. The Chinese are desperately trying to have a slowdown. They've raised interest rates 6 times. They've raised reserve requirements a dozen times in the past 2 or 3 years. China, and rightly so in my view, is trying to cool things off. They got an inflation problem. They got a real estate bubble, or they had a real estate bubble in urban coastal real estate. China is slowing down. That will contribute to the slowdown of the rest of the world.
So how would you be investing in China at this point? There's also concerns about local debt, which is rising to very high levels and raising alarm bells. How would you play China?
Well, the best way, in my view, is to own either commodities or the renminbi, or both. I own the renminbi and I own commodities. The Chinese, no matter what happens, the Chinese have to buy cotton. They have to buy a nickel. They have to buy oil. So those are things which are going to reflect an ongoing expansion of the Asian economy, not just China, all of Asian economies. So my way is commodities and the renminbi.
Now, you mentioned commodities. What if China slows down in its buying of commodities? Isn't that going to affect your play there?
Well, of course it will, but in that kind of case, one of two things will happen. What will probably happen is major central banks will start printing money, and when they print money, the way to protect yourself and to make money is to own real assets, whether it's silver or rice or whatever it happens to be. And of course, I have sold short many stocks, which will, if the things slow down enough, those stocks will go down, and you might make money in commodities on the long side and might make money on the shorts as well. Tara, in the 1970s, we had a world like this. We had economies slow all over the world. We had money printing. Stocks did nothing. Economies did nothing. Commodities went straight through the roof in one of the great bull markets of all time.
Okay, speaking of commodities and speaking of emerging markets, I want to bring in Russia. Putin will return as president. Do you see that as a positive or a negative development at this point?
It's the same old stuff. I mean, Putin's been running the show for, 10 years now, 11 years now. It's just the same old thing. I'm not terribly optimistic about Russia because while they do have a lot of natural resources, the capitalism they practice in Russia is outlaw capitalism, Tara. I don't understand outlaw capitalism. If you're in bed with Putin and his friends, you'll make a lot of money. If you're not, you'll go to jail or get shot or who knows what.
Any hope for reforms in Russia at this point?
There's always hope. There's always hope for anything. But with the same old guys running it, I don't see much hope for. They talk a good game every once in a while, but they still seem to be playing with the same old rules.
We'll leave it there. Jim Rogers, chairman of Rogers Holding. Thanks very much for that. I'm Tara Joseph. This is Reuters.